Blake Shaffer, an economist with the School of Public Policy at the University of Calgary, has co-authored a comment on Alberta's renewable electricity program, which was canceled by the UCP government. The analysis found that the program actually made money for the government, about $26 million to date. So we're going to talk to Blake about that. Welcome to the interview, Blake.
Hi, Markham. Thanks for inviting me.
Look, why don't you give us an overview of your comment, please?
Yeah, sure. So basically, Sarah and I wanted to take a look at how have these contracts fared to date. So these were what we call contract for differences. The government, via the AESO, our grid operator, agreed to pay a certain price. And the average price for the first round was $37 per megawatt hour. And so we wanted to see how have these realized, based on when these facilities generate and what prices have been. And when we took a look, we found, lo and behold, they're actually in the money. They're making money for the government at this point.
Now, it's important, I think, to understand that if the price had been lower, the government would have had to pay the developers. But because the price was higher than $37, the government made money there. And I think the number was $38.35 a megawatt hour. But then on top of that, there's the emissions credit. Could you explain that?
Yeah, so this is, I'll admit, a little hard to explain, but let's do our best shot here. So there's two components of value. Like you said, there's the energy component. So this is the government agreeing to pay or receive the difference between $37 and what prices ultimately realize. So prices realized $38 when this wind was generating. So in that sense, government's collecting by the AESO $1 per megawatt hour. But there's an additional value because these particular facilities that agreed to get REP contracts gave up the rights to earn emission offset credits. Okay, so this is another program that exists in our power space. So if they were just a private developer and just stumped up and sold their energy and received their offsets in the market, they'd be receiving $38 for that energy and about $16 for those offsets. By joining up to REP, the government no longer had to pay that out. So it's a cost they no longer had to incur. So even though it's not a cash flow, it's not like the government's selling this back to itself, by avoiding having to pay that is economic value that this REP program created because we avoided those costs.
Now, interesting calculation on behalf of the parties involved in this, as you and Sara Hastings-Simon, your co-author, point out. And that is so what did the developers get for giving up this extra money? They got de-risking, they got certainty. The return was a little lower, but they got almost a guaranteed return. Is that, have I understood that correctly?
Yeah, in a sense. So they still wear the risk of whether or not they generate or not. So they still wear the volume risk. But what they did by signing up to this, so, like we've said, if they hadn't signed up for this, to date, they would have been collecting $54 per megawatt hour. Instead, they're only collecting $37. So in hindsight, maybe it doesn't look great, but that's not really fair because what they did by joining up for this is they got certainty on two fronts. One, they took away any regulatory risk on what the carbon value may be. Okay, one might argue that that's a pretty good bet to be exposed to it because carbon prices look like they're going up. But they removed that exposure. And two, they removed any exposure to our volatile power market. And so, by agreeing to 37, it may seem low, but they got clearly what they need. This must be slightly above their cost to build this. And they got financing probably at a more reasonable rate because they've got a 20-year contract with the government in place. So by de-risking themselves, it allowed them to get built at what must be a reasonable return if they voluntarily entered into these contracts.
Now, we know from the American experience and the Ontario experience, there's been all sorts of criticism about the design of policy around electricity markets and electricity prices. You and Sara make the point that this is actually pretty well-designed policy, and it really has worked well for both parties.
Yeah, I mean, the big difference between, say, take the Ontario example and Alberta. First, I guess I should point out that Ontario had dual goals. Yes, they had the goal of decarbonizing, bringing on renewables, but they also had a made locally factor in there, which was to affect some other economic goal they had, which is going to raise prices. We didn't have that one. But the biggest difference is Ontario put out basically a menu, a sticker sheet on their door saying, we will pay this for these types of renewables. And in some cases, the most extreme example, small solar up as much as $800 a megawatt hour. That's the one that gets sensationalized. But even wind, large scale wind, was in around the 110 to 140. They dictated the price. What Alberta did is we allowed competition to work. We said, we're going to buy a certain amount of megawatts. Show us your best offer. And we picked the ones that were the lowest. There is a critique of this type of policy, and I've published on this, in that all it's really doing is incentivizing the lowest cost generation, which has worked out well. Low cost generation is probably some of the stuff you want in your portfolio, but only to a degree. At a certain point, we start really caring about value. Okay, so it's not just the cost side of the ledger, but you might be willing to pay a little bit more for, say, solar, because it produces at a different time. So even though you'll pay more, it's higher value. Okay, so the wind realized price here was about $38. Solar realized price over the same period was closer to 60. So over time, we would have wanted to reform that, but certainly for the first couple options, going for lowest cost and getting those competitive forces is exactly the right strategy. And we see that here in the analysis.
Well, look, I interview experts all over Europe, US and Canada about these kinds of issues, and it's refreshing to have somebody actually talk about well-designed policy instead of the opposite. So we'll take this as a victory for Alberta. Now, you also make the point that going forward, because this program no longer exists, that developers are going to be instead marketing to corporate power purchase agreements in order to bring new generation capacity online in Alberta.
Yeah, so REP is gone. I mean, these contracts stay, but no new rounds of REP. But its legacy lives on in terms of price discovery. So what it did was show just how cheap renewables could be in Alberta. So it sort of awakened all sorts of folks, lots of corporate buyers coming in to say, hey, I'm willing to step up and buy for both my energy needs and perhaps some ESG goals at the same time. So from the developer standpoint, what they're losing by not having REP is that 20-year guarantee on revenue. So they're searching out corporate PPAs that like these prices in order to lock that up and get the financing. Because many of these developers aren't the folks with big balance sheets that can go and finance this off their balance sheet. They're project financing. So they need to have some view of reasonable revenue expectations over time. And corporate PPA gives them that.
So last question, Blake, if we're looking off into the future and it appears that Alberta has a reasonably well-designed system and market design and is well-positioned, it has really good wind and solar resources, looking ahead 5 or 10 years, what kind of development around renewables can we expect in Alberta?
I see sustained development continuing to, even with REP gone. We've got low-cost resources. We're not yet saturated in our market, as in it has too much of it to create significant problems. Down the road, we might get there, and that'll require things like what Texas went through in terms of building out more transmission to free up spaces, locations where there's a lot of wind in one location. We're kind of overbuilt in transmission, to be honest, at this point. So, we got a lot of runway ahead of us in terms of integrating a lot more renewables. I'm pretty confident we'll get to that 30% level without any significant problems. At a certain point, we're going to have to talk more seriously about what are our firm low carbon resources. Things like natural gas with sequestration, or be it hydrogen or nuclear or geothermal, or more transmission to couple up with our neighbors. Those are the sort of things the conversation is going to shift to. But right now, the outlook for renewables looks quite bright for Alberta.
Blake, thank you very much for this. Really appreciate it.
You bet. Thank you very much.